what's happening within the insurance sector. Big Philip, we have with us Dr. Tapan Singhel, MD and CEO at Bajaj Allianz General Insurance and Chairman of the General Insurance Council and Founding Director of Bima Sigam as well, joining in on the show right now. Dr. Singhel, thank you so much for your time. Firstly, donning your chairman hat of General Insurance Body, tell me, how do you view the GST Council's decision to bring GST down to nil now on individual health and life insurance? Will insurers be able to fully pass this on, this benefit that is, to policyholders, according to you?
Thank you very much. I think first and foremost, we are very happy with this decision because this has been one of our long-standing demands from the government, and it shows that the government is listening in terms of what we are saying. Now, this question that you asked me, that will insurance companies pass on, comes in from the input tax credit issue that you would be thinking about, that because of that, what the impact would be. But in my view, if you look at it, 18% GST going down to zero has a huge difference. Second, the input tax credit of 3-4% difference which would come in would also be offset. And if the hospitals also come up to speed and they also pass on the benefit to the consumer, because there has been a lot of relief to hospitals also in terms of the procedures and in terms of the diagnostic which would be coming in. Now, if those is also passed on consumer, then the cost of claims would actually also come down. No, so that gets offset there. So in my view, the entire benefit would go to consumers from an insurance perspective, because there are two things that has to happen, and that is why I said it's a very good move, a very historic move from the country. But insurance is not a luxury item which has to be taxed at this high rate. That is what we have been saying, and we're very happy with the government decision on this.
And since insurers will now lose out on the input tax credit, how is it that you're planning to manage cost structures, especially for retail health products?
Yeah, that's what I mentioned. If you look at it, even the hospitals have got relief, for healthcare is also coming. Now, if they have got relief and if they also pass it on in terms of the total cost to a patient coming down, then from insurance perspective, that will also lead to a lowering of claim ratio. And that's why I said even hospitals have to come up in terms of allowing that pass on to the customers to happen. Now, if that lowers down, that would actually be in a way offsetting some of this input tax rate issue which is happening. Second, the insurance companies also have to become more efficient. See, they also have to step forward in terms of bringing in efficiency, and the customer should get the best benefit which has to be there. So in my view, as an industry, our endeavor would be to see that how do we pass on the entire and the maximum benefit to the customer on this. Because that is the spirit of it, and that should not be let down by the industry at any point of time.
Okay, so that's the take coming in. We also have Mr. Krishnan Ramachandran from Niva Bupa joining us. And so help us understand in terms of how the entire input tax credit claim could play out over here. Because since GST removal also means that insurers may not be able to claim the ITC now, what would be the potential impact on your operating cost ratios, and how does this pan out sentimentally?
So, look, I think first of all, I agree with Tapan that this is a significant positive step and will certainly make insurance affordable and improve volume sales and therefore penetration. So I think that's the first comment I would want to make. So there are broadly two components to inputs. One is reinsurance, and there the letter of what's being stated is quite clear that that part of the chain will also be exempt. On the balance of the services, that we consume, which is, vendor services, distributor services, and the point which Tapan made around claims, I think the intent is very clear that the entire benefit has to be passed on to consumers. And as an industry, I do feel we will step up to make sure that the full benefit of exemption is passed on. And we'll figure out how we deal with, efficiency is one answer. The chain absorbing some of this over time is the other answer. But the intent clearly will be to make sure that, and the SM has also stated this, that the full benefit of the exemption needs to be passed on to policyholders. And I do strongly feel as an industry that's what we'll do.
I just wanted to have a clarity on that front, that this new GST rejig that has been announced, will that be only applicable to the new customers that the company will get in, or some benefits of the same can be passed on to the existing ones as well?
It applies to, the insurance is a contract which has, 1 to 3 years or more, because as per the new product regulations. So every time the contract comes up for renewal, whether it's a new customer or an existing customer, the benefit does get passed on. So if it's a new contract, it comes at it comes at the GST exemption. Existing contract, whenever it comes up for renewal, that contract, gets GST exempt.
Right. Mr. Singhel, if I could just get back to you, do you think there will be a need eventually to recalibrate premium pricing because of the ITC loss? Or could this lead to pricing pressure or higher loss ratios within health insurance?
No, I don't think on that basis. See, if you actually, let's take the worst case scenario also. So you're talking about 18% reduction of GST. In the worst case scenario also, it will be about 3 to 4% loss overall, which would be happening, if you look at it. But as I mentioned, to the hospitals also relief has been given, which means that the outgo to hospitals will also come down, if they pass on the relief to the patient and to the consumer that they have, which means that the claim ratio also dropped down. So that should offset from insurance company perspective. Because from insurance company perspective, the outgo are three things: claims, commission of distribution, and management expenses. So if that also comes down, that offset starts happening in that perspective. So there should not be any rejig of pricing happening from insurance company perspective. And as I also mentioned that the insurance company should also work on seeing how they would make themselves more efficient and how the distribution and other things stack up to ensure that there's no rejig of pricing because of this ITC happening. Because the government has made a big move and the industry has to support that move in terms of ensuring that the entire benefit passes on to the consumer.
Right, and also, Mr. Singhel, help us understand how will this move impact the commission structures for agents and distributors? Are insurers considering trimming commissions to protect margins, or how could this aspect of insurance play out?
So I've always mentioned that insurance is a distribution-led business, and this we have seen globally also over a long period of time. Most business in insurance comes to distributors, and the answer for this why it happens is because it's a very important product, but it requires conversation before sales happen, because I've yet to find somebody who got up every in the morning and said, today I'll buy insurance, and very excited about it. Because that's not the way human brain is wired to see risk for themselves. And that's why it's a conversational sale which happens, which means distributors play a very important role. And distributors should always be encouraged to see how best they can optimize what is good for the consumer and do that basis. So I don't think that trying to hurt distributors in terms of putting this together would be the right strategy for the industry. The right strategy I mentioned is negotiate with hospitals, the benefit which is there, which brings down the claim ratio. Right strategy to bring in efficiency in the operation that they have. And also this big relief will ensure that they get more customers to the base. When you're getting more customers to the base, that has an impact on the efficiency of the business. There's a very simple rule. If you are able to acquire more customers with the same infrastructure, it increases efficiency. When you add all that together, I don't see that this should be a big issue in terms of a price jig required.
Along with that, Mr. Ramachandran, how will this move impact the commission structure for the agents and the distributors? Any thoughts on the same? Because one of the key factors that is being highlighted is that there could be some trimming of the commissions to protect the margins as well. Any thoughts here?
It's not a question of protecting margins. The reality is that today the 18% on distributor services, insurers get full input credit, right? Now, what is the balance between making sure that distribution, as Tapan pointed out, it is a conversation advisory-led business? What is the right balance between, how insurers are able to absorb this cost versus passing on to distribution? I feel is a player-to-player decision because 18% is a fairly significant cost to absorb depending on the composition of the book of the individual operator, right? So, for example, at the company level, this could be a fairly significant cost if the retail book proportion is fairly large for a particular player. So I think that answer lies player to player. But I think the immediate point is that, look, the benefit will get passed on. How prices adjust, the price adjustment to the extent that it happens because of lack of input tax credit on a bunch of these services will play out over time is my clear sense. And this answer will also vary player to player depending on their specific composition of business, with respect to individual health.
Okay, Mr. Ramachandran, thank you so much for your time today. Dr. Singhel, great to be speaking with you. Thank you for giving us all that insight on how insurance as an industry gets impacted. As